back to Trading 360, time for our 360 round, and we're taking a look at the PayPal earnings. And I want to bring in our panel, Chris Wong, Research Director of Runnymede Capital Management, and Sandra Cho, Founder and President of Pointwealth Capital Management. Thank you both for being with us. I mean, there were a lot of good news here. The transaction margin dollars, payment volume, transactions, all of those have been good news, and the stock is moving higher. In fact, nearly around 8-month highs. Sandra, what did you make of the quarter and your outlook?
Hi, Nicole. Nice to see you again. I thought there was a lot of good news, just like you said. I mean, you look at the quarter one revenue year over year, it jumped to $7.7 billion. That's a 9% year over year increase. That beat analyst expectation, which came in at $7.5 billion. I really do like that they have a new accounting method. Using that new accounting method that takes in consideration stock-based compensation as well as employer-related payroll taxes. They have beat really all analyst expectations except for one. Active users is slightly down by about 1%, but the transactions per user are up 13%, not to mention the transaction margins jumped 4% to $3.5 billion. That's important because analysts were a little bit skeptical about how much more can you really earn per transaction as far as the margins go. And we've seen that increase. That's really nice.
And so with that, you know, to your point, right, you're seeing a lot of good news, the transaction margin, the transactions, number of the active users, the active accounts, 427 million, which was down 1%. You know, I don't know the whole history, but you almost think it should stay steady or grow. It doesn't sound great. They've been cutting costs. To your point, they have a new structure here, new calculation structure to report the earnings, which you seem to like. Chris, what did you think? What's your outlook?
Yeah, I mean, the new CEO, Alex Chris, he came in last quarter. He set the bar really low. I think that's typical of a new CEO coming into a business that has weakening business trends. He just kitchen sinked it. He set expectations as low as possible. He cut headcount, and he set really conservative guidance that didn't even include impact of any changes that the new management team has planned out. So definitely the numbers looked better than his low bar, but they do have a lot to prove in the months ahead because, I mean, I think PayPal has had trouble innovating. It's a great name. It's a great brand. It's been here since very early in the internet days, but it has to prove that it can innovate against Apple, against Block, in a lot of different competitive threats.
I was just looking, to your point, I was looking at the charts, and the Square Block 1 year was up 20%, while PayPal 1 year is down 11%. And so, I mean, if you had a graphic, you'd see one going up and one not doing so great. And the PayPal seems to be, while it's doing well year to date, right, it's up 11%, it still just seems to be faltering a little bit. And the innovation part, I guess, is it AI innovation? Sandra, what do we need to see? Because cutting costs and maybe righting the ship with the new CEO's expectations, okay, but now what?
Sure. I mean, there are headwinds and there are tailwinds. Some of those headwinds, like you mentioned, are the Block, aka Square, the Stripe, the Apple, the Google. Everyone's getting into the space. There is definitely, it's a crowded area right now, and they're going to have to prove themselves. They do have Venmo, which does have a younger base, and you know they're definitely integrating Venmo more. They're using AI, like you mentioned. They've been rolling out some new integration earlier this year, and they continue to do so. That's management's plan. They've also declared that they are going to set aside about $5 billion or do about $5 billion in buybacks. Hopefully that'll bode well for the stock. It tends to increase, you know, the stock price, but the jury is really going to be out. And I'll tell you what it really boils down to. It boils down to, will we skirt a recession? Because consumer spending, if it goes down, it's going to affect everyone, not just, PayPal, but, just across the board as far as their competitors go too. So that's the real big thing that we're looking at.
And so at this point now, would you buy any of these stocks? Chris, I'll start with you. Are any of these names a buy on your list? I mean, I was just looking, by the way, I was looking at SoFi a moment ago, which year to date is down 32%. Maybe it's a buy now. Any of these names interesting to you, Chris?
I mean, I think PayPal is interesting. I mean, it has powerful brands with PayPal and Venmo. And like you're talking about AI, you need big data sets, and PayPal has that. They have 35 million merchants on their platform. Like you said, 400 million consumer accounts. So they know what people are buying. They know what merchants are selling. They have to convert that with AI to make more business for the businesses. So will we see that? I think that remains to be seen. That'll be the big question. They have to prove it in the upcoming quarters. But if they do, if they manage to do it, they can get their growth up to double-digit growth. I think you have a very exciting story with PayPal.
Sandra, what do you like? Would you buy any of these stocks? I mean, people have to use something, right?
Yes, absolutely. But there is a lot of competition in the space. One thing that Chris mentioned was, the stock has been beaten up. It's declined about 40%. The valuation is fairly attractive, but as far as buying it, it's, really going to be dependent upon your particular risk tolerance. I would definitely speak to a financial professional to determine whether individual stocks, including or not including, Venmo or some of these other competitors, is appropriate for you.
All right, great to see you both. Thank you very much. Chris Wong, Runnymede Capital Management, and Sandra Cho, Pointwealth Capital Management. Thank you both.